Yo, welcome to another episode of Simply Bitcoin IRL. Today we have a very special guest, someone that I've been looking forward to having on the show. Rapha Zagury. He goes by the name Alpha Zeta on Bitcoin Twitter. He is Swan's chief investment officer. Before I bring him on stage, I do want to give a shout out to the Bitcoin company that powers Simply Bitcoin IRL. Of course, I'm talking about Bitcoin Well. Bitcoin Well is the best place to build your automatic self-custody Bitcoin stack. It's a publicly traded company coming out of Canada that recently expanded to all 50 US states. It is self-custody by default. That means that you have to take self-custody if you buy Bitcoin on Bitcoin Well, which perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. They also just announced their instant sell Lightning. So you can literally sell through the Lightning Network, send a transaction, automatically deposits to your bank account. They just launched in Canada. They're bringing it to the US. Guys, check out bitcoinwell.com for an automatic self-custody Bitcoin platform. Bring up Rapha on stage. Rapha, man, I've been looking forward to this for so long. And I'm going to start it off with this because people don't know this, but it was Dom, yourself, and it was during the Nakamoto portfolio. I was actually producing that show. I was in the background. And I'll be honest, Rapha, like I do a lot of shows. So like, I'm like, okay, like but I was so tuned in the entire time because I was fascinated about the conversation. And then the news dropped, and it wasn't just a couple $1 million. It was like $100 million investment, exposure to Bitcoin. I have a feeling you might have played a small role in that. Am I incorrect in saying that?
I don't know. What's up, Nico? Great being here, man. Thanks for inviting me. Same here. Was looking forward to joining you here for a while. So super happy to be here. But yeah, I don't know. Hard to know, right? But as you described, it is exactly right. We like to think that we had, even if it's a small part on this, that we had some part of it on it, right? And just to recap, like we hosted that show. You know, I'm gonna have the dates wrong, but I think it was around September of last year, right? And we went through their portfolio. We looked at that. And by the way, we picked Wisconsin because they have one of the best portfolios out there, right? They're very well established. They have very good asset allocation. They have very good funds that they're already investing in. They're very professional in the way that they report. So we really liked the way that they were doing, but there was one thing missing, right? They didn't have Bitcoin, although they had, inflation protection assets. They had real estate. They had all other things in their portfolio, right? Had a lot of private equity. They didn't have any Bitcoin exposure. So we, on that show, for people that don't know, what we do is that we go through the portfolio. First of all, we invite a guest, so we have a conversation around why it makes sense to have Bitcoin in the pension fund, in an endowment, in a foundation, in one of these large institutions. Then we pull their portfolio, we plug it into Nakamoto portfolio, right? And say, okay, if we were CIOs for the company, if we were investment analysts for the company, if we were looking for an allocation, how much should we be putting in a portfolio? Which is a question we get from everybody. It's like, okay, I get the thesis, I understand. So how much should I allocate, right? The right answer is always 100%, but we can't go back to them with 100% immediately, right? So we'll tell them, like, given your portfolio, given the risk reward characteristics that you have, here's how much you should have. So we did that. We went back, and I put the numbers here now. So it was September 5th. And at the end of the show, we make a recommendation. Say, okay, for this portfolio, we should have, X%. Our recommendation was anywhere between a range of between 1% and 3%. And we said, right now we're going to allocate 2%, right? Hypothetically, Bitcoin was at $25,000. So that would have been 160% performance. So that 2% would have been almost 5% of the portfolio at this point, right? Which is just crazy to think about, if they had followed through. Like, we made some noise around it when we put this out there. We tagged some people from Wisconsin. I like to, I like to think that we had, even if it is a small impact on that decision, that it helped them. And by the way, like, the analysis that I did there with Dom and Foss and Joe, it's all of us. it's very similar to what I would have done to an institution. Like when I was at Goldman doing these kind of, it's exactly the same thing, right? We would sit down, look at the portfolios and say, okay, you're thinking about investing in this new hedge fund manager. You're thinking, here's what you would do, right? So if they saw the show and if they got, even if they read some, it would look like something that, they would know about. And this is exactly why I started the Nakamoto portfolio, right? This should talk in a language that these guys understand, because when they go into Bitcoin Twitter, everything they see, it's memes, noise, and monkeys jumping around. Right?
I mean, Hafa, look, I 100%, maybe that's a stretch. No, I'm sticking to it. I 100% have a feeling you guys are responsible for that. And the reason I'm saying that is my experience orange pilling people has been, you plant the seed, number goes up, and they're like, oh, like F, like I should have listened. And they definitely did the calculations that you just did. And they're like, this was this was a major miss. And they literally handed to us and we didn't listen. So like, but I'm interested, Hafa, in what you said about your Goldman experience. And the reason for that is I have one of my best friends. I went to high school with him. I'm not going to name him, obviously, but when I had John Har on the show, I literally talked about the same thing. And very successful Goldman here in Miami, and he's one out of my 6 best friends from high school that still does not like Bitcoin. Like he's still holding his gun. Then he hates me for it. He's like, it's gone up. He's like, F you, Nico. I don't want to talk about it. So how did you go from that traditional financial background, and how did you get orange pilled? What was it about Bitcoin that attracted you? Because like maybe this is a stretch to say, like Hafa, someone that works in that world is benefiting from the fiat system. Like you are, you're succeeding. What made you convert? Like what made you come to the side of orange?
Yeah, I think it's a combination of several things. But before I go there, if you look, today I posted something on Twitter that you can credit me in the future if it happens. I said that Apple should also think about looking into Bitcoin and allocating Bitcoin to their treasury, which is, it's mind-blogging that that they have not done that yet, right? Given where they are and the amount of cash that they have, and the fact that again they are involved in technology. So we can have another show whenever Apple comes and decide to allocate to Bitcoin, but more important, right? I think there is a switch happening where for a lot of these institutions, up until I would say 6 months ago, a year ago, talking about Bitcoin, right, and thinking about Bitcoin, putting Bitcoin in a portfolio, was almost a career risk, right? It was very hard for them to see, and I saw that. Like I tried to bring Bitcoin up in several conversations at Goldman, Deutsche, Merrill Lynch, and with different people that I knew. And up until a year ago, people didn't even want to listen to you, with very, very rare exceptions, right? Going back to your question, I think, quite honestly, I think I was very lucky to have gone through a life journey that made me, I think, a little bit more open to seeing Bitcoin. First of all, I was born and raised in Brazil through hyperinflation, right? And in crazy hyperinflation, where we would see money literally lose value overnight, right? My mother would give me money to go to the school and say, okay, here's our lunch money for tomorrow. Spend everything, because if you just keep this money in your wallet, in a week, it's going to be worthless. So that already shaped me, I think, to start thinking about money in a different way. Then when I went to university, I was also lucky, and this wasn't by design. I didn't know this, but my university taught us Austrian school economic and also, traditional Keynesian economics at the same time. So that also, I think, got me primed to understand it a little bit better. And even more important, I always love technology, man. I started coding at a very early age. Always loved to code. All the summers, what I would do is I would go to my friend's house, and we would we would run around running BBSs, which were bulletin board systems back in the 90s, right? So I saw the whole, cypherpunk movement starting from the beginning. So I always liked technology. I ended up going to finance because, that's where I think of a lot of people that liked, science and math ended up going, on my generation. But these three things, when I think about, the fact that I was born and raised in a place with hyperinflation, the fact that I like technology, right? The fact that I already had a little bit of an Austrian school background, it helped me significantly, I think, to see Bitcoin. And then the drop in the bucket was, something that it's right here in the corner. It's what happened in 2008, 2009, which is something that Satoshi wrote on the Genesis blog. The financial crisis really got me started thinking about, I need to look into alternative things. And it's like most people, I looked at gold at that time, investing gold. A lot of my clients at the time invested in alternative assets because they were worried about what was happening with the financial system. And fast forward, and I heard about Bitcoin a couple of times, completely ignored like most people in the beginning. And then around 2015, there was a guy that I used to follow who was a gold bug also, and wrote a lot about, the Fed already, and the fact that the deficits were already escalating, and the fact that, regulation was just increasing everywhere. It was harder and harder for banks to do any business. And then he mentioned Bitcoin, and that's kind of like how I got started. I went through all the mistakes that most of us go. I bought some shit coins. I sold my Bitcoin early. But eventually, I came back to it. And then it's a very long way to answer your question. Back in 2019, 2020, the company that I was running in Brazil was starting to take off, was a lending fintech. And as we went through different rounds, right? So I was as embedded in the fiat system as you can imagine, right? I was running a lending fintech that got funded by SoftBank, right? But that whole thing just looked odd for me, and just looked like, it's all, a lot of it is just make believe, right? Valuations are make believe, the money is make believe. And I always had the feeling that the system was broken. So when I left the company, I'm like, okay, now I want to go back to basics, go back to Bitcoin, spend some time. I started going back to contributing to open source software, right? I started going back and coding again. I actually helped the Spectre guys to write their first API back in the day. And then I started seeing what everybody was doing, including Swan, right? And then I got interested in joining Swan. So yeah, that's how I got here.
Man, it's so fascinating. And I remember when I had the conversation with John Haar, I was like, what are you doing here, man? Like what's going on? And and
they question what are the other guys why they're not here, right? And what are they doing at the other side?
yeah, no, but it's almost like, and I remember, I think it was you that tweeted this, right? And it was so funny. You're like, I used to the Fed meetings were some type of ritual, and we were like taking it so seriously back in the day. And now I look at it, and the South Park clip, right, where they're like, what should we do with the economy? And they metaphorically cut off the head of a chicken, and the chicken just runs around. So is it a cult? It is a cult, but we're a cult. But at least our cult's better, right?
Our cult is much better. I will tell you, I'm not kidding. Like, Fed meetings would come up, and not only Fed meetings, announcements like CPI would come up, even treasury auctions would come up, and you could hear like a pin drop. Imagine a trading, like Merrill had this trading floor. It was as big as almost like a football field, right? And everybody was just focused on what, a couple of people were going to decide, because that was, and it's crazy, right? It was super important to their P&L, right? And they would get impacted by those things, and markets would move. So of course people were, were very motivated by money, right? It's a crazy thing. And and now I look back, and that is the code, right? That is the code. It's not this. Like the fact that they're praying for these 5 guys or 10 guys or 15 guys to come up and give the perspective in the way that they want, right? I'd rather just open my code on the node and make sure that, the C amount function is working, and I know exactly what the cap is going to be, and I know exactly when the halving is going to happen, right? And I know exactly what block we are right now. Calling that a code, I don't know. I think the other part's a code, not this.
Yeah, no, I totally agree. And Hoffa, it's really interesting. I've had this conversation with Lavish and Lepard, and I've always had the same thing, which is I've been in Bitcoin 1/3 of my life, right? It's my career. But to do the podcast and to have conversations like with people like you, man, that have this tremendous amount of experience, I've had to go backward and learn the traditional financial system from a Bitcoiner's perspective. Like I learned Bitcoin first and then learned that. And I'm like, oh my God, this is crazy. This is archaic. Like, I can't believe this happens.
Nico,
And
Bitcoiners, I've met more Bitcoiners that know more about macroeconomics than people than traders that do this for their lives. Because Bitcoiners, I think, have a motivation that is very different, right? They want to learn for the right reasons. And they're like, okay, I need to understand this system because I really need to understand if what I'm doing is right? And why we always question, like up until today, I question like, am I crazy, right? Am I the crazy one? Because everybody else is still there. And imagine, like for my generation, for a long time, this is why I created the Alpha Zeta profile on Twitter, because for a long time, I couldn't talk to anybody, around me about Bitcoin, because the few times that I tried, people would just look at me like literally I was crazy, right? And I remember telling people back in the day saying, listen, this asset is going to become really important. It's going to be the subject of presidential debates. And people would look at me like, what are you smoking? And here we are, right?
we were right, Hoffa. So Hoffa, look, and especially with someone with your background and your experience, and because I really want everyone to understand who's watching right now. The 455 of you that are watching right now. Hoffa, I have a question. So how monumental is this in terms of BlackRock coming in, the Wisconsin Investment Fund? You had Wells Fargo that came out that had an allocation to Bitcoin. You had the second largest bank in Europe, I guess PNB Paribas or something, that the French bank. Yep. You had, I think it was JP Morgan came out and they had some type of exposure. You have nations, you have the Kingdom of Bhutan, you have Kenya, you have El Salvador, right? You have nation states, mining. You have the public miners going over there like BitDeer and Marathon. What are we on the verge of? Because, none of these things were true or even existed the last time we were at these prices in 2021. So, I mean, am I being over optimistically bullish? Because I might not have the background that you have, Hoffa, but it's common sense to see that the institutions are here. You have Larry Fink going on Legacy Financial Media and he's sounding like a Bitcoiner, like he's using all our talking points. So could you explain, like, what's your take on that? Like what is happening right now?
Yeah, I think, listen, this all goes back to fundamentals. I think the fact that people are starting to wake up to a few things there, as we were saying, like, Bitcoin is the ultimate savings technology. It's immune to the whims of a few, right? So doesn't matter if a couple of people want to change the monetary policy, right? It won't change. The monetary policy has 15 years of very stable, very predictable monetary policy. And in the world that we live, right, we live in a world of uncertainty. And people would say that Bitcoin is volatile. I think the volatility is in the world right now. Bitcoin is just a beacon of predictability, right, in this world. And if people are gradually waking up to that, and through that process, Bitcoin is going to demonetize a lot of the assets out there. But let's go back to some of the things that you mentioned, because then, I think going through time, it's important to understand what is happening. And I think the importance of what we are witnessing. So first of all, I think the big change that we saw, and we were talking about this through last year, as we started to see that the ETF was going to get approved. This is a massive change because, first of all, it provides, it's like a plug and play technology that a lot of the financial advisors, a lot of the funds out there can just allocate to Bitcoin pretty much immediately using the software that they have, the brokerage accounts that they have, right? They don't need to go and onboard with somebody else, which for an individual, it's easier. Like, for me, opening an account at Swan, at Coinbase, wherever it is, it's an easy process. But for an institution, right, it's a little bit harder because they need to understand how the keys are going to be managed, where they're going to have the keys, are they going to do, um, how they're going to do the custody, right? They're going to do their own custody. They're going to get a custodian. So they're all things that an institution is gonna worry. And when you do that in an institution, you have to sit down in a committee. You have to sit down with your partners. You have to sit down with your shareholders. You need to convince them, right? And a lot of times it's not an easy conversation. Side story here. I'll tell you one story. As I mentioned, like we went through Series A to D for my company. When we did the Series D, when SoftBank came in as an investor to the company, one of the things that I wanted to do, I was already a Bitcoiner by then, and I told them, like, listen, this is an opportunity for us to become the first company in Brazil to show that we have Bitcoin in the balance sheet. So what I want to do with you guys is, we're going to raise, instead of raising X, we're going to do X plus a little bit. That little bit is going to sit in Bitcoin. It's going to be our Bitcoin treasury. We're not going to touch it. We're going to be committed to not touch it for 5 years, right? That amount, I don't need to say it would have been significantly higher, but it was hard. Like I couldn't convince my board. Like my board couldn't understand. It was pretty much free money because it was coming from the shareholders. They already, from the investors, they already said that they were going to do that, right? But my board couldn't understand it. Like, whoa, so you're going to put in Bitcoin? Why not invest in the business, right? So it led to conversations that took, and I was founder and CFO of the company, so it led to conversations that were much longer than I wanted. I dropped that very quickly. I said, listen, I'm just wasting time. And then I started thinking about the company and raising capital. And then, I don't want to put the Series D round, it was Series D round two at risk, right? So then I completely abandoned the idea. And I think that has happened for a long time because of the difficulty of people understanding and also thinking, like we went through discussion about custody. So how are we going to custody the Bitcoins, where it's going to sit, right? It was a world that was completely opposite from what everybody was seeing, right? The ETF changes that significantly. It becomes much easier for anybody to get access immediately. Do I think it's the right way to hold Bitcoin? Do I think people should be buying an ETF instead? Of course not. People should buy Bitcoin, have self-custody of Bitcoin, understand the process of self-custody. I think one of the best experiences to go through, I'll tell you, like Guy and I had a meeting with some billionaire Brazilians about a year ago. And as we were sitting there, we were talking about Bitcoin, go through all the things like the cap, everything. Everybody understood. What really got them converted was the second that, Guy gets his phone out, sends me some sats in my phone, right? And they see the sats going from one phone to the other pretty much immediately. And then, I send it back to him. That experience for them was just like, so let me get this right. I just saw one person that had custody of an asset send it to another person pretty much immediately. And we could have been sitting, thousands of kilometers away. So that experience, I think everybody needs to go through to really understand, because that's how you're going to understand, also the details around how the mempool is set up, how transactions are built. And ultimately, I think people get there. But going back to the importance of the ETF, it's kind of like a gateway drug, right? People are going to get in, they're going to understand more the asset, number is going to go up, number go up. It's a very strong incentive for learning. Then people start learning a little bit more, right? And before you know, an allocation, as price goes up, an allocation, as we saw, with Wisconsin, that started at 2% becomes 5%. It becomes relevant in the portfolio. So you really need to understand at that point. So one thing just leads to the other. Then we started having, after the ETF came out, and I think that started to bring some legitimacy to the asset class. Then we started to see just the dominoes start to fall into place, right? And as you said, we saw BlackRock coming in and completely changing their tune around Bitcoin. Saw, pension funds like Wisconsin coming in and allocating, right? So we continue to see a wave of different institutions putting Bitcoin in their portfolio. And gradually, as that happens, it just brings more and more legitimacy to the asset. I already thought until 2, 3 weeks ago or a month ago, right, as this was all happening, like, listen, impossible for Bitcoin to be banned right now because the adoption is already so wide, right? We already have, a senator, a clear Bitcoiner with Senator Lummis. So I think it's very hard for Bitcoin to be banned. After what happened this weekend, right, which I think it's a culmination of all these things with Trump coming in, and now it's clear that it became, not only it's a political issue, right? It's a platform, and whoever is going to be against Bitcoin is definitely going to lose a lot of votes, right? And that's not only in the U.S., right? The U.S., I think it's the most important place for this to happen because it's kind of like showcases for the rest of the world. But I can guarantee you that politicians in Brazil, in Argentina, in Chile, right, in Europe, they are taking notes, and they're like, listen, my next election is coming in. I better be pro Bitcoiners because if there's one thing with Bitcoiners, right? We're very noisy. It's a cult, as you said, and we're gonna come back and if Bitcoiners like you, they're gonna be promoting you. But if they don't like you, right, they're also gonna be telling people about the things that you should be paying attention that you're not.
Yeah, 100%. And oh man, you're making me extremely bullish. Okay, so Hafa, the institutional, what you're saying is the institutional stamp of approval. I think BlackRock had a lot to do with that. Definitely the change in tune. Now, what I would say from because I really see Bitcoin as two things fundamentally. There's the investment, and then there's the revolution. The revolution, in my opinion, is self-custody. I think that's really going to change things. Fundamentally, in the sense that it's going to change the relationship between the individual and the state. You as a Brazilian, me as a Venezuelan, we understand that very well, right? So does it worry you at all that the vast majority of the Bitcoin that these institutions hold, we have a name for it, it's simply the captured Bitcoin, is all custodied with Coinbase? Like, it's just one big honeypot, one executive order 6102 Bitcoin version away from, just like that. Do you think we can ever get to a point where, you have public companies actually taking self-custody themselves? I mean, Jack Dorsey made it open source, like what to do and how to do it. Do you think we'll ever get to that point? And do you think that's necessary?
I think we will. It is absolutely necessary. There's no question about that. I think Bitcoin, let's go back to the fundamentals, right? It's the first time that we have an asset, right? Not only financial asset, but an asset that we actually can have custody of it and personal custody of it. There's no other asset that I can hold that, just by memorizing 12 words in my mind, I would hold the asset, right? So one of the things that a lot of these institutions haven't realized yet is that this is the ultimate collateral. Bitcoin is better than anything out there that we use as collateral today. Let's use gold as an example, right? So if we use gold as a collateral, I mean, you need to verify that the gold is going to be in a vault somewhere, that it is real gold, right? First of all, that what you have there, all the bars are gold, and that it's not being rehypothecated between you and 100 other clients, right? As I was saying, like back in 2007, there's one thing, in 2007, everybody knew that the crisis was going to come, right? Everybody was talking about it. Everybody thought that prices in real estate were really stretched, that everybody was super leveraged, right? So it was very well announced that the crisis is going to come. It took much longer than expected, just like most things usually take in financial markets. But I had several clients coming to me. There was one specific, I was at Goldman at this point, that they like, listen, we want to protect ourselves. We've looked at everything. We want to buy gold. And then GLD, the gold ETF, was already available. So the first thing they came to us like, okay, so we're looking at different options. Let's start with GLD, right? Very quickly, they looked at GLD and like, well, I don't know exactly where this is held, right? I don't know exactly where the gold is. I don't know if the gold that they have there is rehypothecated or not, right? It's going to take, and you can get to these, you can do due diligence, you can really understand, right? But these are all risks that you're still running, right? And you're very, very far away from the collateral. The distance between the holder and the collateral is gigantic, right? And it is subject to things, as you said, right? The government could come in and could just confiscate. Not that they've done this before, right? They could come in and confiscate the gold, right? And he was worried about that, so he said, "Okay, so I don't want to do that. What's the next option?" And so we go through all the options, right? At the end of the day, it's like, okay, so what I should do is maybe have, and this is a large family office, so it's not like they can just buy the bars of gold and hold them, in their office. It needs to be somewhere, right? So they couldn't get comfortable. They went all the way to saying, okay, so we're going to go to Switzerland. We're going to see the vault. We know where the vault is. We know that the gold is there. But then they started going to this endless analysis. Like, I don't know if it's my gold again. I don't know if it's gold. I don't know if the day that I leave there that they're going to sell that gold to somebody else, right? There's nothing saying in the gold that it's my gold, right? Bitcoin sorts all of this out, right? You know that the Bitcoin is your Bitcoin. I can sign a message verifying that I own a UTXO that can hold 10 sats, for example, right? So I proof of ownership. It's really, really easy. It's completely verifiable. I can look, after knowing exactly the address for that Bitcoin, I can just look at the blockchain 24/7. I can monitor that it's not going anywhere. It's not being rehypothecated. And more important, it's controlled by me, right? I memorize 12, 24 words, and that's it. I can hold as much as I want, and I don't need security guards, right? I don't need complex vaults, any of that. Literally, somebody can cross a border, escaping from Venezuela, escaping from even Brazil, right? You never know. I mean, countries have changed significantly pretty much overnight, right? So the fact that we have access to an asset like this, I think it's completely underplayed, and people don't understand that well. It will happen with time. I think, as I was saying, as you get into Bitcoin and understand all of these things, then you come to the realization of how much better it is than anything else that it's out there, right? It can hold its value across time, across space, much better than all of the other assets that you have there, right? Living in Brazil, like, one of the things that Brazilians do a lot to store value is to buy real estate. And I don't think people understand, first of all the costs that they run with real estate, and then, more important, all the risks, right? It's not really your real estate, and you can stake it across the border if something happens, right? It's always going to be there. Try stop paying your taxes to see what happens. Ultimately, you're going to lose your real estate. You're going to be taxed to death because, when you, at least in Brazil, when you pass that real estate to your kids, you have to pay an inheritance tax, and, you have to pay taxes on pretty much everything, and you pay annual taxes. So, it's the Bitcoin, you don't pay anything for it, right? It's just sitting there by definition. So, I go back also a lot to, like, the reason why I ended up in Brazil is because both my grandparents, at some point had to escape their countries because of several things, right? Either World War II, or, they're being persecuted for other things. So these things have happened in history, right? And we always think that, these times today are different, and that's never going to happen. But it's happening, right? I mean, if you were in Ukraine, you had to leave Ukraine, right? If you are in different countries that get into a war, you may have to leave, and you may have to leave everything behind, after doing that. And try leaving a country like Brazil with a bar of gold and going through customs, right? I wish you luck. You're not going to get through. And again, I think the characteristics of Bitcoin are just very, very different than anything else that we have out there, and people are going to see that with time. Just another very quick side story here. After I came to Swan, and I went back to Goldman because we were at some point we were
they let you in.
They asked hardly,
They
but
didn't arrest you at the door.
I don't know why they had like two guys, watching me and coming escorting me up, but that was weird. But it did happen. But jokes aside, like when I raised the capital for my company in Brazil, so my company in Brazil did unsecured lending for individuals in Brazil. Doesn't get riskier than that, right? I mean, very high default rates. So we had, of course, very good technology to monitor the clients, do underwriting of the clients, right? Goldman invested in our credit fund, right? So they gave us capital to go out and lend to the clients. Very high yield, as you can expect, but very high risk. And risk that it's unpredictable, because typical default rates in this market, to give you an idea, Nico, is like 20%. When we had like 20% default rates, we were very happy, right? And we were making a ton of money, because banks in Brazil will lend money to their clients, right? If it is short-term capital, at 10% a month. So it's not 10% a year, 10% a month. So today in Brazil, you need capital from a bank, right? They will charge you, if you're lucky, they're going to charge you 10% a month, right? So we were lending at less than that, at like 7%, and we were already making a fortune, because again,
of course.
like but the risk is the market starts to decline, the default rates go from 20 to 40, and you're screwed, right? So anyway, so we did that. Fast forward, I come to a Bitcoin only company. So I called the Goldman guys. I went there to visit them, right? They're like, listen, I'm thinking about doing a Bitcoin backed lending fund, right? So it's completely collateralized by Bitcoin. You see the Bitcoin, it's over collateralized, right? Let me tell you again, there's no risk on this, right? You're seeing the Bitcoin. Your risk is the remote risk that overnight, it's 50% over collateralized, that 50% of the value of Bitcoin evaporates overnight. It literally needs to be overnight, because otherwise you can just do margin calls, right? What did they tell me? Oh, we don't want to do that. That's too risky, right? So that just tells you everything. It's like, it's not logical, right? It's not logical. There's no logic in this, because if it would be logical, they would just put the numbers in a spreadsheet, right? They say, okay. I said, and then at the end, I pressured them, like, guys, you're out of your mind, right? This is much better economics than what you have. I don't understand. And at the end of the meeting, the partner tells me, he's like, listen, the reality is that I'm going to have a very tough time going to my investment committee and talking about Bitcoin and explaining to them what Bitcoin is. And he's like, I get it. He didn't get it, but he's like, I get it, right? But I'm going to them and explaining that it's going to take me a month. It's going to take me 2 months, right? I don't think they're ready to that. And he's right. They're not ready to that. And remember also, like, this is a guy that, has a pipeline of 10 of their funds are looking to get capital with him. Right? There are other opportunities. He doesn't need to pay attention to this. And there were up until, and this is again just to close it up, but up until I would say the beginning of this year, the career risk for all of these guys was to not look at Bitcoin, right? And very, very soon, and it's starting already, I can tell you the career risk for all of them is going to be to not look at Bitcoin. Oh. I wish luck to a lot of these pension funds that 5-10 years down the road, they're going to get asked by their constituents. They're going to say, you had all these people talking about Bitcoin, this asset class that went up, and you have Wisconsin that allocated is doing really well, and now we can't pay our pensioners. They're going to have to come up with a very good justification of why they didn't allocate to Bitcoin, right? And at the minimum, and this is what I've been telling, like, it's okay if they decide that it doesn't fit their portfolio, but they need to take a look at the asset, sit down and understand. And people are not even doing that. And I think, I don't think, I'm sure this is a fiduciary breach to their investors, right?
100%. I 100% agree with you. And again, we were talking about it in the very beginning, right? It's almost like cult-like behavior, but you have the CEO of Vanguard, Grant, and I don't think it's a coincidence that he resigned when he resigned. He's grandstanding. It's like, no, we like with the tie, like we're we can't do that. BlackRock, best performing ETF in history. So yeah, it 100%. If you're a quote unquote financial advisor and you're not, telling your client to allocate at least 1%. Of which I think is very concerned. It always starts with 1 and ends up 2 and ends up 3, right? We all know that. You just need the foot in the door. Yeah, I think
on
it's
that
completely
point,
responsible.
this is important. Like, I was discussing this with Terrence the other day, and he mentioned that Lynn mentions the same thing, which is I would rather an investor start with a small allocation and not rebalance than starting with a larger allocation and try to trade in and out, right? Because Bitcoin is an asset that it's because of the volatility and because it's early and because it's still capturing monetary value of a lot of assets out there, it is going to have volatility. There's no question. Volatility, we should embrace it. It's a good thing. It's not a bad thing. It means that it's early, right? So I would rather these investors start small, but don't mess with it. Leave it. I always tell the institutional investors, like, listen, you're going to allocate to this asset, write in your investment policy that you're not going to touch it for a minimum of 4 years, right? Ideally 10, but a minimum of 4 years. You're going to allocate, you're going to leave it there, and it's going to go up significantly, it's going to go down significantly, right? But if you just start trading this asset and rebalancing, you may end up with less assets at the end of the day.
Yeah, and I think that's like I call it the price of tuition. If you first start shitcoining, then whatever, and it's all just because you want more Bitcoin. But it usually, Odell has the famous line, right? Stay humble, stack sats. It's really that simple. Hoffa, like an interesting phenomenon too, with like high net worth individuals that are like kind of forced to become investors just to maintain their purchasing power, right? They either outsource that, they try to do it themselves. It's almost a shock to them when you go to them and you're like, you just have to buy it and you put it in cold storage and that's it. And they're like, that is impossible. And they kind of go through this like mental process of like, that's insane. And then they start to listen to you because it's like, wait, the kid in the t-shirt and the hoodie, and like he's giving me better advice than this guy. Like, what is going on here?
Yeah.
So but Bitcoin does that.
It starts with what even before all of that. Let's question, why does the doctor, right? Why does the lawyer have to think about buying stocks, about buying bonds, right? About thinking about, I'll tell you, like my father is a doctor and he needs to invest. He's like, oh, so where do I put the money now, right? And it stresses him out. Like every month he calls me up, it's like, listen, I have these bonds that are coming due, where do I put the money? How do I invest, right? And this happens all the time. The reason why it happens is because, again, the money is broken, right? It's a current, you're swimming against the current. And if you just sit there, and people very quickly realize this, they leave the capital sitting in their checking account, right? 5 years down the road, 10 years down the road, your purchasing power already went down by almost half, right? And when I worked with high net worth individuals, right, the number one concern, and these are people that are worth like $50 million, $100 million, number one concern on their minds was running out of money, which is, I remember looking at like, there's absolutely no way this guy's going to run out of money, but they knew something I didn't know, right? They're like, oh, I'm getting older and, my healthcare costs are just exploding up, right? And they just seen what has happened and they're extrapolating to the future and say, well, what happens in a world that, inflation really picks up? And I can't just sit here and think that, I have $100 million, maybe is an exaggeration, but the guy that, used to have like $5 million, in 2008, it was considered like, oh, this guy doesn't need to, I remember like saying like $5 million, you don't need to work anymore in your life, like never, right? I mean, you can just go enjoy life, buy a boat, right? Go buy a nice house, and you can just enjoy life the rest of it. I mean, it's not that $5 million is little money, still a lot of money, right? But I can tell it's hard to retire
yeah.
with $5 million today, right? And it was even less than that, right? If you look in the 70s, there was this show called The $1 Million Man, right? That used to run in the US. And $1 million was like, oh, this guy, it's like a billionaire today. It's pretty much the same thing. It's like a billionaire today, right? Somebody that has so much money that doesn't even know where to put the money, right? And look at the number of millionaires that exist today in the US, right? It's ridiculous, and it's not because people are getting richer; it's because the money is it's becoming worthless, right? And through this process, we saw the monetization of assets that should
Yes.
have never been used
The
for
premium on real estate is
crazy,
bonkers. It's
crazy.
insane. Doubling in like 1 or 2 years. It's insane. Yeah.
It's crazy. The secondary, and it's all again the government's fault, because in the U.S. you have all these benefits to buy real estate. You can deduct the interest that you get, right, from your taxes. So you are very incentivized to buy real estate, and people did. Like, people were rational in that decision. But what it ended up doing is now you have a new generation that's coming in to buy homes, and they can't afford homes, right? The homes became this Frankenstein of an asset that shouldn't be a savings account, and it became a savings account. It got morphed into something that it was never supposed to be that way. It's supposed to be a place where you live and you raise your kids and you have your family, right? And not a place where you put your money in. And that's what I was going to say. Like in Brazil, historically, that's where people put their money. Like, oh, I'm
Hoffa,
gonna
they
buy.
come here to
I
Miami.
know,
They
I
come
know.
here, they buy an apartment completely empty, just leave it there. They'll pay the condo fee, and they're like, I am good. I'm doing great. And then prices double, and then they see it. There's a huge Brazilian community here, so I know
I know.
exactly what you're talking about.
And they're not being, irrational by doing that. First
Not
of
at
all,
all. Yeah.
an apartment in Miami, the Brazilian government, good luck going to take it over, right? It's going to be much harder. So just for them, crossing the potential capital controls already has a lot of value to it, right? But more important, they just look at the charts and they're like, yeah, Miami real estate went up, pretty much every year for the last 5-10 years, right? So as an investor, investment is the best investment that I can probably do. Now, there's a limit to how much monetization an asset like that can take, right? Uh, I think in real terms, not in nominal terms, maybe there's no limit, because people keep printing money, and then of course prices keep going up. But in real terms, there's a limit, right? I can guarantee you that prices of real estate in Miami, priced in Bitcoin, are not going to go up in the next 5-10 years. They're not, 5 years from now, we're going to look at prices of a home, a condo in Miami or New York City or whatever big town that you want to get, right? And price it today in Bitcoin, look at it again in 5 years, right? Very, very hard. I can't guarantee that. It's a guarantee because I'm exaggerating a little bit, but very, very hard for prices to be, when they're priced in a hard asset that has a hard cap. We're not going to be producing more. People can, governments can ask as much as they want. They can change the code as much as they want. They can try to do whatever they want. We're always going to have 21 million. That's it. It's a cap, right?
Yeah.
And people are going to realize that also. I think, and this is why it bothers me when people say that there's a lot of volatility in Bitcoin. There's no volatility, man. Again, look at this. Like, it's at the most stable monetary policy that you can find in the world today, right? None other governments are this stable. None of the other shitcoins are this stable, right? None of them have this track record. So it's simple. Don't complicate, right? As you said, stay humble, stack sats. It's the best.
100%. And you said something really interesting, which is that we have this idea that the American dream is dead. And specifically, if you're a millennial or you're a Zoomer, the American dream is dead on a fiat standard. On a Bitcoin standard, it's thriving and it's been exported worldwide. Life just gets cheaper. Even Miami real estate, you're going to get it at a discount 5 years from now if you denominate your wealth in Bitcoin. Now, Hoffa, I want to double back to something you said earlier in the conversation. And this is something that I hear a lot, which is we are too late to Bitcoin. But you said actually we are very early to Bitcoin. What do you mean by that?
Yeah. So let's go back to what we were talking about, right? The monetary premium that a lot of these assets have captured through decades, right? So real estate, I think it's a good example. Let's stick with that. $320 trillion market cap in real estate, right? Estimated. I think maybe actually higher than that. I would argue that more than 50% of that value, it's in real estate, because as we were saying, real estate became this savings technology, this Frankenstein of a savings technology, right? So it's assets that went there because they needed to, right? everybody says, well, COVID came in, there was a lot of money printing, and everybody said there was going to be inflation. Inflation never came. Inflation, first of all, came. It's already significant, even if you look at CPI of all these made believe indices. But the real inflation didn't go into like the groceries, right? The real inflation went to the savings assets, because if you're close to the money printer, right, you're not going out and buying groceries. You are also, but you're putting your money to be invested somewhere, and that's typically in the stock market. That's typically in real estate, right? So stocks became even more monetized, right? The fact that we kept seeing prices go up, right? Right in the middle of COVID, like people couldn't understand, like, well, what's happening? Why is the S&P up so much, right? In the middle of a pandemic. And it's because the monetization of the asset, right? The money printer prints, the money lands somewhere, the money needs to go somewhere, right? It doesn't sit in checking accounts everywhere. And it ends up, and this is not a trivial process, but it ends up in all of these assets, and all of these assets kept getting an even higher monetary premium, right? So if you look at all of these, and Bitcoin today compared to a $320 trillion market cap, right? Which is, again, and it's not only real estate, it's gold, it's silver, it's art, it's stocks, it's bonds, right? All of these assets that have been monetized for the wrong reasons. I'll give you another example. Look at the US stock market, the S&P, compare the performance of the stock market with any other developed or developing market in the world. The S&P trades at a significant premium, right? The Brazilian stock market hasn't gone anywhere in the last 10 years. Euro stocks hasn't gone pretty much anywhere in the last 10 years, right? So there's a premium that people are paying to go into US stocks. The US stocks keep getting, again, monetized. People are throwing money even at meme stocks, right? Which, again, just tells you that there's a lot of money going around, right? A lot of fiat going around, which is easy money, which is soft money, right? So the addressable market for Bitcoin is all of these assets. It may not demonetize, and it won't demonetize all of them overnight, but will gradually, and has started already, to demonetize all of these, right? I've met real estate investors that sold real estate property to invest in Bitcoin, right? I've met people that sold stock to invest in Bitcoin, and it's still a tiny drop in this huge ocean of liquidity, but it's happening. People want to see the numbers, right? They can go to Nakamoto portfolio. And I wrote there what I call it's the Schrodinger model. I'm not going to go too much into detail, but it basically puts probabilities. You can put down any probability you want. And then you can say, okay, if I think that, Bitcoin has a 5% probability of capturing the monetary premium of real estate, and I think that's going to happen in 20 years from now, right? How much should Bitcoin be worth if I believe in that world, right? And then it will give you an estimate based on that. And the numbers are usually way, way, way higher than where we are right now, because again, we have just captured a fraction of the fraction. Yeah. So if you click there on run the numbers on the left side on the Bitcoin Schrodinger model. So here people can put down any, if you click there on, for example, real estate on the right, on the arrow down. Yep. So you can change here the monetary premium and how much you think it's going to capture of each of these assets and what the probability is. And you would see by doing this that Bitcoin, it's absolutely and massively underpriced at the current levels, right? Even at very low probability. A lot of times in conversations, again, with institutions, I do an experiment, and I'll tell, like, even before I have all these conversations, I tell them, like, listen, I know you're not very bullish in Bitcoin, right? I know you're just getting started on this, but let's think about two scenarios. Let's think a scenario that, yeah, Bitcoin fails, didn't work, right? It's a catastrophe for some reason, right? We find out something that, I think probability is very low, but there's some bug in the code, right? For these people, they think there is something like that, right? So think about that. And then there's the other scenario, right? The other extreme. So let's talk about the two extremes where Bitcoin really captures the monetary premium on all of these assets, and it becomes the global standard for pricing everything, right? how much probability you think of that scenario? And I always shocked of the numbers that people tell me. They tell, oh, I think it's I don't know, it's a 5% probability that happens, or a 2% probability. And then I plug the numbers in and I tell, okay, so if what you're telling me is right? So if it's only a 2% probability and I plug it in here and I look at all of these assets, Bitcoin should already be 10x from where it is today. So you should be you are telling me, it's not me, you're telling me that in your role that you just made up for me, Bitcoin should already be priced today. It should be priced today 10x or 5x or whatever it is, their assumption of where it is right now. Never in one of these conversations we get to the right price of it. It's always much higher than where Bitcoin is, which again just goes through. If you do the opposite calculation, you just plug in, okay, so what's the current price of Bitcoin and what kind of probabilities will get you to this price, you'd see that the probabilities are very, very low. And Nico, I think this is also another way that to show people that, why we have volatility, because as these probabilities in everybody's mind, right, go from 5% to 10% to 15%, the reflection, right, it's going to be massive changes in price at the end of the day.
So Rafa, first of all, huge fan of Nakamoto Portfolio, and I got to produce a couple. I think the first two shows for it. So saw it with you and Dom and Joe Carlosari, I believe, was on there as well.
Greg Foss
and Foss, man,
yeah.
Love Foss, legend. So okay. So now I want to get into what Rafa thinks. Okay, so this is the potential, right? Are we early? That was a great answer. But what is your personal your personal bias? Like, are we talking about a 10x over 20 years? Like that makes me a little depressed. Are we talking about a 10x over the next 5 to 10 years? I think I heard you somewhere drop the 100x statement. So what are you personally doing with your financial planning? Like, what are you expecting Bitcoin to do?
Yeah, quick disclaimer before, and this is first page. If you go to the first page of Nakamoto Portfolio, you see it's written there, I don't make price predictions, because making price predictions, they are all going to be wrong. So if I tell, Bitcoin, and if anybody tells Bitcoin price is going to be at the $100,000 by this date, right, just run away, because it's impossible to predict the price in an asset that it's still super early and it's still capturing, as we just saw, the monetary premium of a lot of other assets, right? It's also true for a startup, right? If I just started a company today, I told you, Nico, let's get a price for this company, the price would be 0 in one day. The next day, something good happens, and then the price is 10x, and the next day, something bad happens and it goes back to 0, right? So it's the same way. It's the earlier an asset is, the higher volatility you're going to have, right? Which again, think the other way, the fact that we still have volatility in Bitcoin, it's a very good sign that shows that we are early, right? If Bitcoin price was just going up by 0.05% every day, very stable, very predictable, I would know that, we were close to the end of the cycle, right? So this is the first indication that I look and I say, probably it's super early, right? How quick this is going to happen, I don't know. Does it matter if it's going to be 10x, 100x? I don't know also, because it could 100x in 1 year, but based on a dollar that it's worthless, right? And that doesn't mean anything, right? Yeah. I think purchasing power is going to continue to go up in Bitcoin terms, right? So going back to our example, I think that 5 years with 100,000 sats, you're going to be able to buy more things than you can buy today. Quick thing also that we have, it's hidden there in the Nakamoto Portfolio, but it's a fun exercise to go through. I recreated the Big Mac index, which is a traditional index that it's used for. It's down on the right somewhere. That it's used for currency. So they get, it's like this. The Economist writes this index, and they'll go to different countries and they'll say, okay, with what is the price of one Big Mac in each of these countries, right? And then some of them are cheap, some of them are more expensive. So I did the same thing, but with Bitcoin, right? And you can see it's a big set index. So you can see where it's cheap, where it's more expensive. But then if you scroll down, there's a chart that all the way down, just keep going down. There's a chart, there you go, that you can actually go back in time here. There are arrows somewhere that you can go back in time. And you can see, so today, this is the amount of, I forgot how many sats, but you can just click and animate it. And you see that, with time, you just bought more and more Big Macs with the same amount of sats, right? That trend, I don't make predictions, but I can predict that trend is going to continue. You're going to be able to eat more Big Macs in the future than you can buy today.
Hoffa, that is a very clever way of not making a prediction. Okay. All right, guys, there you go. There's your model. Very, very clever. But that's absolutely awesome. That is so funny. That's incredible, man. Okay. So Hoffa, historically speaking, Bitcoin has followed this cycle, right? Usually about 12 months to 18 months after the halving, things tend to go parabolic. A lot of people are saying that the halving, that the cycles don't play that big of a deal anymore because the subsidy is not that high anymore. What's your take on that, right? A lot of people are anticipating, 2025 is going to be a good year for Bitcoin, especially with all the things going on the institutional level, on the nation state level, on the, minor level as well. What are your expectations? And you can answer in Big Macs if you like.
Yeah, Bitcoin has a weird way of always surprising everybody to the upside and to the downside, right? Whenever you start seeing people say, yeah, it's definitely going to be at 100K by conference day, or it's going to go down to 7K, whatever it is, you know that it's not going to do that. And it is going to surprise one way or the other. I think we don't have enough data, right? So if we look at the cycles, right, there's basically like 2 full cycles. This starting the third one where you have good enough price data to take a look. It's super interesting and almost, scary to see that in the tops and the bottoms were made at kind of like the close to the same. There's that chart, the spiral chart of price that shows that, the dates are very, very close. So I don't know if that's a coincidence or not. I do think that this cycle is different. Like the fact, and I think it's going to surprise to the upside because the floodgates are open, right? What we were talking about, that institutions can have very quick access to Bitcoin. This is a game changer. I'll tell you.
Hold on, Hoffa, because I heard this the other day. Doesn't this actually like suppress the volatility as these institutions start to sell some of it to like balance their portfolios? I don't know what the technical term for it is, but doesn't that cause a little bit of downward sell pressure?
No, because the amounts of new institutions coming in compared to the ones that are already in and rebalancing, you're not one order of magnitude different, like probably three orders of magnitude. Like you have for every institution that it's rebalancing and selling to rebalance at this point, because, again, the adoption is like, think about it. People that talk about this, they don't understand the addressable market of Bitcoin. The addressable market to Bitcoin, again, it's everything. It's all of the assets that got monetized through years for the wrong reasons, right? Boats, arts, real estate, equities, right? Bonds, all of these assets. Like this is the addressable market. As people realize that the amount of institutions that are going to be coming in and putting 1%, 2%, 3%, 5% of their portfolios in Bitcoin, this is going to have an impact on price. Quite honestly, that hasn't happened yet. I mean, we've seen very, very early indications that some institutions are allocating, but even if you look at the amounts that went into the ETFs, it's great, but it's small compared to the total assets under management that you have out there. So I don't think we are at that stage that the rebalancing of these institutions is going to have any impact whatsoever in the price. Exactly for the things that, again, we just discussed.
Yeah, and I agree with you. By the way, I think. And again, I'm, my career, 1/3 of my life has been Bitcoin. So I'm looking at it from that lens. But basically, the last cycle, I feel like a lot of people have PTSD from it. I think it was cut short because of the China mining ban. The hash rate dropped off a cliff 50%. I think it brought the price down with it. It's like literally correlated, the hash rate and the price. And then within 9 months, of course, the hash rate recovered, price made an all-time high. But I feel like it kind of like took away a lot of the momentum. Was it on purpose? Maybe. And then, of course, the whole FTX debacle and stuff. So the general consensus here is what I'm seeing now is that people are like, oh, 100K, You know, that's what I'm hearing. And I'm like, and then it's what you said. Bitcoin tends to do the exact opposite of what everyone thinks.
Yep.
So no one knows. Like you said, if someone tells you what's going to happen with the price of Bitcoin next year, they have no idea what they're talking about. They're probably trying to sell you a paid trading course or something. But yeah,
Just one point there, which is important. Nico.
Yeah.
Like, this is the one of the hardest assets that I've ever seen in my career to hold, because I always say this, it's months and years of pain, and you only have days of pleasure, right? You're going to be happy for very short periods of time because price is going to go up explosively up very, very quickly in concentrated periods of time. In vast majority of the time, you're going to be like now, which is like, you're just looking at the price like, oh, it's still 60K, it's still 60K, it's not going anywhere. And then it goes down to 59 and you're like, damn, this thing is not going to, I was wrong, right? Bitcoin is not going to go anywhere. And then when you're almost giving up, right, and you're at the point of puking it out, then it just surprises you. And then it's obvious. Then everybody's like, yeah, of course it was going to 250K, right? Of course. Like, I always knew that. And now it's going to 5 million, right? And then, of course, then they get screwed again. And it's going to continue to be like that, man.
Yeah, no, it literally takes the path of most pain every single time. And man, I really enjoyed this conversation. Rafa, thank you so much for joining us. It's taken way too long for joining me on Simply Bitcoin IRL. It's been a pleasure. And
Thanks,
thank you so much. Why don't you tell everybody where they can find you on the interwebs?
Yeah, don't find me. I'm kidding. So at Twitter, usually it's where I am. Alpha Zeta with 2 A's. It's right there on the screen. So people can find me there, and happy to help with any questions, asset allocation, whatever it is. Just hit me up, and happy to help always.
Absolutely. And then the website you were showing off is nakamotoportfolio.com. And you can have fun with it. I think I heard about the cheeseburger thing, but I never really played with it. But anyways, Rafa, thank you so much for joining us. Appreciate it.
Thanks, Nico. Great being here, man.
All right, guys, that was another episode of Simply Bitcoin IRL. If you guys enjoyed the show, smash the like button. Consider subscribing if you feel like we provided you value. And we'll be back tomorrow for the live show at 12:15 p.m. Eastern Standard Time. Peace out, everybody.
Episode was brought to you by BitcoinWell.com, on a mission to enable independence.